Okay, let's also connect with Mitul Kotecha, who's joining in. Mitul, thanks so much for taking time out. Given that now we're watching out for economic data on the service and manufacturing sectors, what's been your reaction to the move that we've seen across asset classes post that 50 basis points rate cut by the U.S. Fed?
Well, I think the initial reaction was risk on. The market reacted well to the 50 basis point move from the Fed. I think the way the Fed messaged it was also positive. It wasn't seen as a panic rate cut, but something to really kickstart the whole easing cycle off in a solid way. The Fed still sounded pretty constructive on the economy, with the jobs market as well softening, but not dramatically. So I think in a way it's a fairly positive cut from a market perspective, and we saw that reaction. But actually, at the end of last week, some of that positivity did tail off. U.S. equities were lower, but I think going into the next couple of weeks or so, it just set the market up generally fairly positive for risk. What we've been seeing is obviously the dollar has been under a bit more pressure, and that is helping as well in terms of EM assets and EM currencies. We've already seen a steepening of the U.S. yield curve. That should help cyclical currencies as well. Global volatility measures have declined. When we look at the VIX or the interest rate volatility, such as MOVE, that's also helpful for risk. So it does seem generally that we're in a better risk environment going into the next, or at least in the near term.
Mitul, can I say that from a market standpoint, the Fed event is over, and now perhaps it's obvious, which is in terms of what could be the implications of that? Rates are down, flows will increase, liquidity will move up, and that could move back into commodity and emerging markets?
I think in a sense you're right. The Fed surprise is over. There was a lot of debate about 25 or 50, and in the end we had 50, and in a way it was a little bit of anticlimax. But I think I wouldn't say it's necessarily plain sailing for the global market. I think when you look at it, we've still got worries about China. Chinese economic activity continues to remain under pressure. That, I think, continues to put a downward pressure on commodity prices. We still have a lot of geopolitical tensions, clearly in the Middle East, and of course ongoing in Russia, Ukraine, and elsewhere. That is also a potential risk for markets. And then, we are going to be data watching. Every single US data point with regard to the jobs market will be important. If we see another soft payrolls print, that could also have a negative impact on risk. So I think, look, I'm very tentative. I think we've got a near-term rally in risk assets in the offing, but I do think there is clearly some major risk events and potential stumbling blocks that I've just mentioned that could derail this. So I don't think it's plain sailing in that environment.
All right. And finally, Mitul, what is it that you're expecting down the line when it comes to the kind of economic data that we'll be monitoring, the service, the manufacturing sector, and what that could bring about for the global markets, and any other data points?
Yeah, look, I think, as I mentioned, that the jobs data is going to be particularly crucial in the US. And, we're going to be watching every print there. And any clues to upcoming payrolls reports are going to be important. The Fed has already said that they would see unemployment rate getting up to about 4.4%. And they've managed to put that into their forecast. So if we do see something above 4.4% on US unemployment, that will raise concerns, potentially meaning we could see a more aggressive Fed easing going forward. But I think, on the other hand, the other thing to look at is, of course, global manufacturing has held up reasonably well, despite the fact that we've seen weakness in China coming through, and PMIs that sound softer. Again, we'll watch out to see whether there's resilience there. And on the service sector, again, that's going to be an important focus. But look, all of this as well, we have to bear in mind, we've got a lot of political events, US elections coming up in early November. That's going to be also very, very important for markets. And we may not see a huge amount of risk taking or a huge amount of strategic positioning, maybe more tactical, ahead of the US elections. So I think all of these factors are going to play in terms of importance as we go into the next few weeks.
Good to have you on board. Thank you for giving us a sense as to what we can expect in terms of data points, and of course that reaction that we saw of global equities to the Fed rate cut.
If you like this video, then like, share and subscribe to ET Now.